Welcome back to this channel. This is Unfiltered Forex with me, Clement, and in this video, I'll be talking about a stock called Bilibili. This is the name you can see here, Bilibili X Aniplex. So the whole banner here, this poster is an animation, a Japanese animation, commonly known as animes, and it's called To Be Hero X. Right, so the anime itself, it's good. I watched it. If you have watched it, you know it's good. So the company we'll be looking at is Bilibili. This is the production company behind the animation, and they teamed up with Aniplex to do this. The reason why I'm doing this, you'll understand in a few. But Bilibili is a Chinese company, Aniplex is a Japanese company. All right. Then before I get into looking at what this company does and what they actually do, keep in mind it's an entertainment company, meaning they are in the entertainment space. Yeah, there's an article here. Bilibili shines at Anime Japan 2025, unveils exciting lineup. This was early this year, March 24th, 2025. Yeah, and as you can see, when you read through, Bilibili making a notable return since its debut in 2019 was the sole Chinese exhibitor of animation content. This is the part I am very concerned about. Sole Chinese exhibitor of animation content. This is a Chinese company. Usually, Chinese companies they don't how do you call it? They don't expand outside of China. But to see a Chinese company expanding outside of China, it's a really good sign that the company is focused on growth, and soon there'll be a big deal not just in China but even outside China, in Japan for example, and probably become a household name in the entertainment industry outside of China. It's already a big name in China, you'll see in a few, but outside of China is not very common, so they're trying to penetrate these other markets, and that's why I am focusing on it. This another thing that makes it a highlight, which we'll get to in a few. Otherwise, for now, let's go to the investor relations website. Remember, Google search Bilibili IR, Bilibili investor. Yeah. So this is the investor relations website. This is where you'll find the details about the company and the financial reports and what they actually do. So scrolling down, you can see this is the stock price, Nasdaq. This is the US listed name, $17. This is on the Hong Kong market, Chinese market, 140 Hong Kong dollars. All right. So you can see the business highlights of the latest quarter report. This is 2024 Q4. The coming earnings release for this company is on May. Earnings are on Tuesday. When is this? It's actually today. Yeah, it's expected to be announcing its Q1 2025 earnings release before the market opens on Tuesday, May 20th. This is actually today, and they'll be releasing earnings in a few. So, even before the earnings report come out, you can take a look at the previous reports and see what to expect. So they have 103 million daily active users, which is a really big number. 240 million monthly active users, 29 million monthly paying users, and 99 minutes average daily time spent. Yeah. So I told you it's an entertainment company and they have a wide range of services they offer. I think if we scroll down here, you'll find them. Yeah, there's a Bilibili Game Center, Bilibili Live, Bilibili Ad. This is for adverts, membership, like you've seen there for paying members, and there's comics and there's merchandise. So the main businesses are usually the the live. It's like a video, like a YouTube. Yeah, they have like a YouTube thing. They also make games. They also produce some games, and they also sell comics and merchandise, right? So that's what they do. They're in the entertainment business, and yeah, they do that. This ad thing is for advertising. If you want to advertise with Bilibili, advertisers can do that, which we'll get to in a few once you look at these ones. So quarterly results. There's the earnings release, presentation, transcript, webcasts. So the important one here is going to be the presentation. The earnings release is also important, but it's not very user friendly. You can see it has a lot of details, has a lot of text, which is not a good summary. This is actually the report itself, and these are details. So what we need is the summary. So we go to the presentation, investor presentation for February 2025. Scroll down. Right. So rapid growth of daily average users, daily time spent. So you can see daily average users. This is in millions, 103 million. This is in the Q4 of 2024. Right. And you can see these are previous quarters of the previous years. Same Q4 of 2023, 2022, like that. Right. Average daily time spent per user. You can see it increased in year over year. There was an increase, slight one, but yeah, it's there, which is good. And then, of course, the financial highlights improving margins and profits, gross profit. Yeah, this is in Chinese renminbi. Yeah. Okay, so for this one, it's not easy to like translate the figures directly to USD, but you get the gist. This is 2 billion Chinese renminbi. Yeah, should translate to about, I think it's $200 million. Yeah, around there, 200, $300 million. Yeah, you can see the gross profit. This is a gross profit margin, 36%. It has been increasing over the whole of last year. Started at 28 in Q1 2024, 29, 34, now 36. And we'll see the latest report how it's going to look like. And then net profit, right? This is another major highlight for this company. This company has been unprofitable since it started. I can't go deeper into the history of the company, but yeah, you'll just have to take my word for it on this one. And if you go and check for yourself, since I think it's 2013, 2014, there when the company was launched, was started, they have never been profitable. They've actually been losing money, but this time they actually gained some profit. The 2024 Q3, that was last year around September, October there, they actually made a net profit, their first net profit ever, and you can see that number practically almost doubled, yeah, in the next quarter, which is a really good sign. All right, moving on. Massive video based industry. Yeah, like I told you, this is their video section part, their video business. And then, of course, this is their market. You can see 7 out of every 10 Gen Z plus population in China are Bilibili users. Yeah, so they have a really big market share in the streaming platform, the streaming arena, that is. Yeah. And then, yeah, there's some stuff here we need to check. Okay, let me just scroll down up to the important statistics that I'm looking for. Highly engaged. Yeah. What? Yeah, there's the retention rate, which is around 80%, which is really promising. And something else we need to look at here. Advertising. Yeah, Bilibili is becoming a go-to platform for advertisers, right? Advertising is a really big part of business, especially in the Chinese market, because it's a really good way of monetizing anything. Advertising is big, yeah. And Bilibili recently majoring into it as a revenue source, and we'll see in a bit how that's turned out for them. Of course, video and live commerce, a new growth driver, integrating content with ads. You can see it's of course about adverts, and yeah, 150%. Advertising revenues, robust growth with great potential. You can see on a year-over-year change, advertising revenue really picked up. Yeah, they went big on advertising in 2024. You can see they started here, finished the quarter here, and the full year results. This is the full year results. So it's like that. Top game content community with strong operation and distribution capabilities. Yeah, this is the go-to video community for gamers. It's a really popular platform for gaming due to this community feature. You can see there's a new game they're announcing here. It's coming. And moving on. Yeah, there's also mobile game revenues sustained growth. The gaming industry that they are part of is the mobile gaming, and you can see revenues have sustained strong growth. You can see in Q1 2024, it was not yet at a billion Chinese renminbi, but at the close of the year, the final quarter, it was almost 2 billion, right? So there was a 79% increase year over year, quarterly, on a quarterly basis, and the full year revenues from mobile game revenues from mobile gaming was actually up 40% compared to the previous year. So you can see these are some of the factors that contributed to how, after so many years of losing, they suddenly started becoming profitable. You can see in the last 2 quarters they have been profitable, and now as we go deeper into the report, you can see where that profitability is coming from. Is the ad revenue and the mobile gaming revenues. All right, so you can see the financials now. So robust growth driven by diverse revenue mix. Now this is where you can see the revenue sources. This is VAS, this is video as a service, advertising, mobile games, IP, intellectual property, derivatives, and others, right? Advertising, you can see the advertising business has kind of been growing in the past few quarters, and it's been a really big source of jump in revenue for them. You can see when mobile gaming has been growing quite consistently. It started at 17%, but by the end of the year, mobile games were contributing 23% of the total revenue. Yeah, meanwhile, video as a service, they are kind of trying to keep it at the level it is, trying to go big on advertising. You can see advertising has grown from 29% to 31% of the total revenue. And yeah, you can see now this is the full year results compared 2024 versus 2023. You can see 41% here, 44% here. They weren't really big on the video as a service, and they went big on advertising and mobile gaming, right? The other part, IP, intellectual property, it's the same usually. Yeah, so you can see how big these two categories have become: mobile gaming and advertising. Improving cost structure and gross margin. You can see gross margin has been improving for a while. This one you can leave it for now. Improving operating profits. Yeah, this one is important to look at to see where the company is actually spending their money. Operating expenses. So sales and marketing, they're really putting a lot of their money into marketing, which is good. This is how you grow a brand. It's just marketing. Also research and development, just probably development of new games and new features for the video as a service. It makes sense that they're spending a lot on research and marketing. General and administrative, this is actually a very good sign that the company is not spending too much money on salaries and employee benefits, and yeah, general administrative, they kept this low. See 5%, 5%, 6, 5%, which is good. This is a good sign of a company that's being managed well. And the operating profit, you can see the past 2 quarters, they actually turned a profit, right? And this was the first time in 14 years. Yeah. Consolidated balance sheets. Now these are the numbers, and it gets technical, and that's where the presentation ends. So from here now, we're going to move over to the Alpha Spread website, where you're going to see more details about the stock and the company financials. You see the intrinsic value here is $20. So the stock is currently undervalued because the price is 17, 18, 17 dollars, $18. Yeah. So having the intrinsic value at $20 means the stock is currently undervalued, right? But yeah, anyway, let's move on. You can see the quarterly earnings releases here. This is 12 months totaling. Yeah. Yeah, you can see the stock price. This was early in 2020, 2021. This was during the recovery of COVID thing. There was a lot of hype. A lot of stocks in the Chinese market have these spike and then the return to normal, if I may call it. Yeah, they have this spike and then the return to normal. Like even if you check here, yeah, the intrinsic value price really was above and spiked completely out of control. But with time, it came back to the intrinsic value, and over time, it's going to rise again, given how promising the outlook is looking for this company. All right, so moving on. hmm yeah, this is where I wanted to say financials. You can see quarterly, the EPS is positive. This one for the first time in 14 years. Let me do annually and see. Yeah, the columns here don't go as far back as 2014, but this is 2016, and you can see how it was. Since that time, the company literally has never been profitable since it started. It's only very recently that it's starting to show signs of profitability. On a quarterly basis, they're already profitable. You can see the EPS, earnings per share, is positive. Operating cash flows positive. Operating income positive. Net income positive, which is really nice. It's promising because you can also see it's been a trend. They've been reducing the costs here and consistently increasing the revenues, meaning if this trend continues, the stock will also follow suit in due time. There's something else. Yeah, the balance sheet. Balance sheet, this is also very important to look at. Cash and short-term investments. Yeah, this is a very stable company. They have a lot of cash on hand. Like you saw with the operating expenses, most of it is in marketing and research and development. So they need a lot of cash on hand to finance those operations as they have not yet been profitable enough. Right. So yeah, we have a lot of cash, and this is a really good sign. Liabilities are minimal, and yeah, the assets, cash, 16 billion. This is over 50% of the total assets, which is a really good sign. All right, moving on. Free cash flow analysis. Right, free cash flow. This is the amount of money the company has to spend for operating expenses. And you can see it turned positive last year still. In the last 2 quarters of last year, they were really good for this company. Their free cash flows were positive, which is nice. All right, moving on to the margins. You can see the margins are almost all of them are red, right? Because this is on a rolling, totaling 12 months average, right? That's why they're all red, despite the fact that the company has shown some profitability in the past 2 quarters. If the company keeps up the profitability for the next 2 quarters, then some of these margins will start turning positive, right? As you can see, we're already very close to the zero mark. Operating margin minus 5%, net margin minus 5%, free cash flow margin is already positive. All these others are all negatives, but the gross margin is positive so far, right? And you can see it's increasing. They're actually improving their margins as they continue to also improve all these other margins, the net income margins, the operating margins, the return on equity is also starting to improve, and given time, they're going to do really well. All right. I haven't looked at the projects in the pipeline for the company, but the fact that they're measuring on advertising and the gaming thing. Yeah, the fact that they're measuring on advertising and mobile gaming is enough to tell you that if they continue like this, they will soon be very profitable and their business is going to grow almost exponentially at some point. All right, back to here. Yeah, these are profitability score, solvency score. Yeah. This one you can check them on your own. And then price target summary. You can see even the lowest forecast is already above the current market price. So this is one of those stocks that is like a hidden gem. It's highly undervalued. All right. You don't know how long this sideways trend may persist, but you know the stock and you can see the stock is undervalued, and even the market can see the stock is undervalued, and the potential to the upside, the highest estimates you can see, it's a double in price. The analysts are expecting price to double. That's the highest forecast, but the average forecast is between 40 to 50% increase in the price, right? Which is that time is going to be very probably the uptrend when it starts picking up. It's going to be very strong, and we may even get to this 36 mark and go higher. Of course, that's going to happen probably in the next 1 or 2 years, maybe. I'm not very sure, but this current consolidation is what's really holding this stock back. If the stock manages to break out past these resistance levels, then we're going to see these targets become more and more likely to be achieved, right? But at the moment, this stock is a really nice stock to buy. You can see it's highly undervalued, and yeah, the financials are looking very promising. They're good. In fact, they're good. They're looking promising, and the balance sheet is very strong. By the end of the year, this stock probably may be above $20 and even above $30. I'm not very sure, but let's just wait and see. Otherwise, for now, I think I'm done. I have nothing else to add about this stock. That's all. Have a lovely day.